Stay informed on earnings trends and analysis in Zacks Earnings Outlook.
The Q1 earnings season is in full swing now, so we're going to see where we're at with it with our research director, Shiraz Mian, who's joining me here. So, do you like what you've seen so far? Let's start there.
Sure, I do. Growth is very strong. There's plenty of momentum on the revenue side. Margins are still growing. We haven't seen enough on the revisions front yet, but what we have seen thus far is pretty good.
All right, banks have already reported. The financials were expected to show some fairly large gains, 24% from what I read, I think. Did they live up to that expectation?
They mostly did. I have a slide to share with folks here, and as you could see, we have results from 48.3% of the sector's market cap in the S&P 500. Total earnings a little better than what you quoted. Total earnings are up 27.2%, 9.2% revenue growth, 87% beating EPS estimates, and 56.5% beating revenues. As you could see in this comparison chart that we are showing here, the only element that is not comparing very favorable to recent history is on the revenue side. Not growth, but the proportion of finance companies beating revenue estimates. It's still very strong, but not as strong as we saw in the preceding quarter. So overall, a pretty strong showing from finance. This was expected, and it appears that finance has turned the corner, and we should continue seeing strong growth from finance in the coming quarters as well.
So what does the scorecard look like early in the game here?
So I have a slide here that shows the scorecard. We have total 73 S&P 500 companies have reported results. Okay. Total earnings for these companies are up 25.8%. Revenues are up 10.6% for these 73 companies that have reported. 82.2% are beating EPS, and 71.2% are beating revenue. The slide shows a comparison, the growth and the proportion of beats for these 73 companies in Q1 versus the previous periods to put these results in a historical context. And as you could see in this slide, any way you look at it, it represents an improvement and an acceleration. The right-hand side chart shows the proportion of companies beating both revenue and EPS. And as you could see, 64.4% are beating both revenue and EPS. A very strong showing relative to what we saw from the same group in the previous earnings season, the 4-quarter average and the 12-quarter average. So a very strong showing.
All that said, what's the margin story right now?
The margin story is very strong too. In fact, the momentum we have seen from finance is to a large extent driven by stronger margins from the banks and the other companies in the sector. And we knew some of that already. We knew that as interest rates went up, it boosts their net interest margins, the difference between the rate at which they lend and the rate they have to pay to the depositors. So strong margin picture. We'll see how the picture evolves in the coming days, but fairly impressive thus far.
Let's talk tech then. We're talking here on the 19th of April. Tech companies set to report soon. We've already heard that Taiwan Semiconductor expects lower revenue going forward. That kind of cast a little bit of a shadow over the market today as far as the tech stocks are concerned. What are you looking for?
So I'll show the growth expectations for the sector in a second, but I do want to mention this up front that tech had been doing pretty good over the last few earnings seasons as well, and the expectations for this earnings season remain pretty elevated too. And we may see a continuation of what we saw last few quarters, but when expectations are this high, there's always the risk of the results not being good enough. And what I'm showing here is the expectations for tech, S&P 500 tech in Q1 contrasted with what tech reported in the previous 2 quarters and what's expected in the following 4. And as you could see, earnings for the sector are expected to be up 20.9%, 11.4% revenue growth. Very impressive numbers, but as the chart shows, the sector's performance in the previous 2 quarters was even more impressive. So the growth is expected to continue. There is the chance that results may not be as pristine as they have been priced in. Here, I'm putting the same results, but at a more granular level. So we are showing the medium industry level results. We'll start seeing these results reflect in the tech results as they come up. Next week is a big one. We have Google reporting results, Amazon, Facebook, Microsoft, Intel. So a lot of these numbers we'll see how they, whether we see realization of those or not.
You mentioned not good enough, but in this case, does not good enough necessarily equal bad?
It wouldn't be bad. The issue with tech has been that it's been a leading sector, both in terms of earnings growth as well as stock market performance over the past quite some time. I would say the past couple of years. We see some of that optimism erode a little bit recently. You mentioned the Taiwan Semi. There have been questions about Facebook and engagement and all those kinds of questions. So it's not bad. The question is how pristine and how pretty those are. And one could make an argument that with expectations this high, they may not live up to those standards.
Got it. One of the least popular sectors last quarter and last year, as a matter of fact, was energy.
That's right.
But now we have higher oil prices and presumably higher profitability for the companies in that sector. Is my thinking correct?
That's totally correct. You would recall that a couple of years back, energy dragged the entire S&P 500 into what we call then an earnings recession. That situation changed, and about a year ago, when the year-over-year comparisons for oil turned positive, we saw the sector's earnings turn positive as well. We have been seeing strong results from the sector over the last many quarters. That's expected to continue in Q1. And as you rightly point out, with oil prices showing a lot positive momentum, that should drive the revisions trend for energy companies in Q2 and beyond. And we are starting to see that already. So yes, energy should be a strong earnings contributor in the coming quarters. Keep in mind, though, that energy as big of a piece of the larger earnings picture as it used to be. It produces about 5% of total S&P 500 earnings right now. Technology and finance combined contribute almost 45%.
Good point.
So it can't move the needle to the same extent as some of these other sectors can.
Good point. So is it accurate to say then, against this backdrop that we painted here, that you painted, bottom line, you're totally optimistic about Q1 earnings?
Absolutely. I think the positive trends and positive developments on the earnings front that we saw in the preceding earnings cycle in the 2017 Q4 reporting season, all of those appear to be at play and continuing into Q1, and it's reasonable to expect that we will see continuation of that in the coming quarters too. So yes, I'm very optimistic and satisfied with the overall earnings picture.
All right, we're going to check in with you at least a couple of more times before it's all over with for this time around. Don't forget that if you want written commentary, Shiraz's thoughts on how the earnings season is progressing, you can get those fresh twice weekly on Zacks.com. Every Monday, he talks about the earnings preview. previewing the sectors that are reporting that week and the companies within those sectors and what he expects to see out of them. And then on later in the week, Thursday, Friday, he gives you the full-blown earnings outlook, the trends of the S&P 500 earnings reports that have come in up to that particular day. Follow it all on Zacks.com. It's always there for you. And with Shiraz, I'm Terry Ruffalo.